Tracy Reinick, Zacks stock strategist. And today I'm going to take a look at some of the hot growth stocks that are reporting earnings this week. Yes, Fangman is basically all reported other than NVIDIA, but still there's plenty of tech and social media and other high-flying growth stocks that are out there that have yet to report. So I put together 5 of the hottest ones for this week. Let's see, are they still going to be hot during this earnings season or not? Let's dive right in. So Square will lead us off, the hot fintech name. Look at this chart, only one earnings miss there right at the start of the pandemic in 2020. And it's put together some really big beats, including last quarter when it beat by 106% here. That's what the long green arrows indicate. But shares kind of treading water a bit here in 2021. Not surprising because of the big gain in 2020, but up only about 17% here year to date, which is a little bit under the S&P 500. It is not cheap. It's trading at 138 times forward earnings. So maybe we're waiting for a catalyst on this one to see another breakout. But this is one everybody is going to be watching this week because it's one of the hot big growth stocks. Then let's switch over to another one of those, Mercado Libre, ticker MELI. This is the Amazon of Central and South America, but they also have a big online payment system. So they're kind of like a Square or a PayPal as well of Central and South America. So they've got dual mandates here. They too had the big rally in 2020, and then a little bit trickier here in 2021, also coming off another big beat. What? That's an earnings surprise of 1,400%. I'm not seeing an earnings surprise like that. So I'm not sure what the analysts were getting wrong there. But the shares have pulled back a little bit here, and year to date, they're now down about 11%. This is not a cheap stock by a PE ratio. It's trading at 540 times because obviously investors are banking on future growth here and not necessarily what's going on right today. But should they be, is this one just too hot to handle? We will see. Then we're going to switch over to one of the big social media stocks that's been in the news, Pinterest, ticker PINS. I own this one in my own personal portfolio. And yes, this one is actually getting beat up pretty good here in 2021 after the big rally last year. So shares are now down 32% year to date. And that's after the rumors that PayPal was going to buy them. And then they said they're not. So shares have sold off on that news, plus just worries about subscribers, the advertising side, which we've seen a little bit problematic with some of the other social media companies. So everybody's thinking Pinterest is also will be the same. But with the shares down now 32%, shares are trading at about 40 times. So that makes it kind of cheap compared to most of the stocks I'm going to talk about today. And even compared against some of its other peers in the social media space, it's not super pricey here, but is there going to be some kind of surprise here in this quarter of either better than expected or even worse on the negative part of the story? I don't know, but this is one everybody's going to be watching. And then we're going to switch over to one of the hottest IPOs of last year, Airbnb. ABNB is the ticker. You can see the big gains there to start 2021 as the vaccine was only just starting to roll out here. And everybody thought we'll still be staying and traveling and staying in the Airbnbs. But they did come back down to earth here in the middle of the year, getting a boost, a little bit of a mini rally here, but put together 2 beats after that first initial miss. And so this is one kind of up in the air. Shares are only up 16% year to date. That's below the S&P 500. There is no PE because the earnings are still in the negative. And are those earnings still going in the right direction? That's the question. The hotels have opened, a lot of people traveling, but wanting to stay in hotels now maybe and not Airbnbs. But this is something to watch. This is a big one on the travel side of things for this week. And then we're going to wrap it up with DraftKings, one of the popular hot growth stocks on StockTwits. And a lot of people like to trade this one. But as you can see, Its earnings surprise track record is not good. It has not yet beat since it went IPO. So that's kind of disappointing. It doesn't yet have a PE because it too has negative earnings. So that also is disappointing, but it's a growth stock. So you're buying it for the growth. Still, the shares are kind of responding to this track record now. They're basically flat year to date. So even in the traders, or if you just bought in earlier this year, you're not doing too well in this stock. So this is going to be a question of when do the investors and even the traders demand a little bit better performance than what we've seen so far from DraftKings. I don't know, but this could be the quarter that maybe that happens. So if they get a beat here, their first beat as a public company, that could be a big catalyst as well. So this is going to be one of the hot ones everyone's going to be watching this week out of these hot growth stocks. So there's always some hot stocks that are reporting every week during earnings season, and I'm going to be bringing them to you all earnings season long, because even while this is a very busy week with 1,500 companies reporting, next week is busy too. So you don't want to miss a single episode of the Earnings All-Stars. You can get them all on Zacks.com/YouTube. You can also follow me on Twitter or StockTwits, where I tweet out both the videos and all the earnings charts. So get our earnings data somewhere, and I'll see you again next time with some more earnings charts.